Heya Cryptozens. Tonight's show, WazirX to delist USDC, FTX's Ballpark Billion, and U.S. Treasury wants your input. It's 10 p.m. Pacific time. The date is September 19th, 2022. Welcome back to the Crypto Overnighter. My name is Nicodemus, and I'll be your host. The cover model, mascot, and co-host for this podcast is Tex, and together we take a nightly look at the crypto, NFT, and metaverse space and the industry that surrounds it. Now, if you have questions or comments on the show, come and find us on Twitter or email us at nick@cryptoovernighter.com. And keep in mind, nothing in this show should ever be considered financial advice. So, right about a couple of weeks ago, Binance announced that they were going to delist some stablecoins. That USDC, Pax Dollar, and True USD would no longer be a tradable asset on their platform starting September 29th. And what that means was a little confusing for some people because they weren't banning those coins. What it means is that any Pax Dollars, for example, any Pax Dollars coming onto the exchange would be automatically converted to Binance's stablecoin, BUSD. Same thing would happen if you need to send USDC. You could do that easy enough. You just convert your BUSD to USDC as it leaves the exchange. But it just means that Binance isn't going to store those stablecoins on their exchange. And I wasn't a big fan of that at first, but I'll get back to that. They did say, however, that they were doing it to, quote, enhance liquidity and capital efficiency for users. Well, WazirX has decided to follow Binance's lead on this one. For some reason, WazirX has also decided to auto-convert those same three tokens. They put out an announcement today that said, quote, WazirX has stopped deposits of USDC, USDP, and TUSD. We will not support any new deposits. To enhance liquidity and capital efficiency for users, WazirX will implement BUSD auto-conversion for users' existing balances of USDC, USDP, and TUSD stablecoins at a 1-to-1 ratio. So did you hear that? The exact same reason. To enhance liquidity and capital efficiency is the exact same reason that Binance gave for their whole decision. So they explain that they're going to freeze withdrawals on USDC, Pax Dollars, and True USD on September 23rd. And then all of the stablecoins will be delisted come September 26th. And then beyond that, the auto conversion of those stablecoins to BUSD is expected to be completed on or before the 5th of October. But come on, this is just getting weird. WazirX and Binance continuing whatever it is that's going on here. Recently, WazirX found themselves in trouble. India's Enforcement Directorate accused WazirX of violating their currency exchange rules and froze their assets. And so CZ then denied that Binance owned WazirX. Now keep in mind, he said the exact opposite back in 2019 when this weird little saga started. So back last August, CZ hopped on Twitter to announce that the 2019 acquisition of WazirX by Binance never happened. And it seemed to be a point of contention between the two companies that WazirX's co-founder fighting back, saying, quote, WazirX as a product and a brand is owned by Binance. But all that weirdness aside, the thing is, I just did not like the whole auto conversion to the exchange stablecoin at first. But the more I think about it, the more I like it. I think it solves some problems if everyone agrees to play by the same rules. You see, Binance is saying that they're going to swap USDC to BUSD and back at a 1-to-1 ratio. Always. Same with Pax Dollars and True USD. What if all exchanges did that? So Gemini says, we're not storing anybody else's stablecoins on our exchange anymore. But you can store our stablecoin on the exchange and earn your 8% or whatever the going rate is. What if you knew, no matter what the exchange, a USD stablecoin is a USD stablecoin in terms of value. no matter who issued it. But the exchange only has to maintain one stablecoin and only has to maintain one liquidity. Wouldn't that eliminate some of the instability around stablecoins? If exchanges always swapped US dollar denominated stablecoins on a one-for-one basis, I think that would solve the problem of depegging and bring some stability to the space. Now, how do you do that in a decentralized environment? I think this problem could actually take care of itself. If the exchanges see the value in having undiluted liquidity, they might just do it on their own. Maybe off something like a memorandum of understanding that says, hey, we agree to exchange our stablecoins on a one-to-one basis. But that might solve the problem of depegging stablecoins. At the time of writing, the global crypto market cap is $945 billion. That's up 1.68%. The top 5 cryptos by market cap are Bitcoin up 0.56%, Ethereum up 3.09%, Tether, USDC, and Binance Coin up 2.34%. A ballpark billion. That's roughly how much money Sam Bankman-Fried says that FTX has to spend on various projects and products. So SBF was on CNBC's Squawk Box when he said that FTX has at least $1 billion to spend on bailouts and acquisitions. Didn't seem too eager to commit to a specific amount. He said, quote, "You get to definitional issues here. How much should we really feel comfortable deploying? Saying that there's another ballpark billion that is completely unencumbered certainly will get you within a factor or two of the right answer. Think back. Look at Voyager and BlockFi, just as a couple of examples. Bailouts and acquisitions are kind of FTX's thing right now. Every other week, it seems like they're trying to buy out an exchange in a market that they haven't penetrated yet, which is a good, solid plan. Presumably, those businesses have the required licenses. The licenses would go with the business. And they were under the gun for some of these deals, especially the bailouts. SBF said, quote, "We only had a few days to make some of these decisions," adding that the key factors were backstopping customers and making sure they're protected, as well as stopping contagion from spreading through the ecosystem. On the subject of Voyager, SBF explained kind of how it went. That Voyager was given, quote, "a sort of two-piece line of credit. The first was $70 million. And that $70 million was money that they could just draw on immediately, no strings attached. And we knew we might lose that." Which mirrors comments that he's made before that he just kind of counted that money as gone, that he's not counting on getting it back. Now, lest ye think that SBF has a messiah complex, he says that he recognizes that it's important for crypto to find a solution for keeping crypto businesses afloat. Specifically, that it's not good in the long run for him to be bailing companies out. He said, quote, "It's not going to be good for anyone long term. If we have real pain, if we have real blowouts," he said, "and it's not fair for customers, it's not going to be good for regulation." He said it was, quote, "important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow." Which that puts him kind of at odds with Binance's CEO, CZ, because CZ doesn't seem to think very highly of bailouts. He said bailouts should not perpetuate bad companies. Quote, "Let them fail. Let other, better projects take their place," and they will. Right now, it's estimated that FTX's revenue topped $1 billion last year. But while they're successful, that doesn't mean they're popular. Because the UK's Financial Conduct Authority, or FCA, has warned their citizens about FTX, that they're operating without authorization. FTX joins a list of unregistered crypto companies. More companies are out there operating unregistered in the UK right now than there are registered. 37 of them right now operating unregistered, including Crypto.com. Now, this was issued on the 16th of September, and it says FTX, quote, "may be providing financial services or products in the UK without authorization." And so the British regulators are warning UK crypto investors that if something goes wrong, if it goes bad, they're probably not getting their money back. And they since alleged that FTX is unregistered, so that means that the Financial Services Compensation Scheme won't be able to help them either. So January of 2020, these regulations were put into place. They're designed to help the FCA enforce anti-money laundering measures and counter terrorist financing regulations. Last August, a spokesperson for the FCA said, quote, "Successful regulation depends on a firm meeting the minimum standards we expect to prevent money laundering and terrorist financing. And we have seen too many financial crime red flags missed by the crypto asset businesses seeking registration." Now, FTX is also looking at some recent regulatory issues here in the U.S. as well. Back in August 19th, we covered that the Federal Deposit Insurance Corporation had hit FTX with a cease and desist. They're saying that FTX has misled the public about crypto-related products being covered by the FDIC. The global NFT market cap is up 1.8%. Sales volume is down 6.96%. According to CoinMarketCap, the top 5 NFT collections by sales volume are Bored Apes, followed by CryptoPunks, Mutant Apes, Other Deed, and Azuki. Now keep in mind, some of these collections have very volatile prices, so do your own research. The Treasury Department has been busy lately. Tornado Cash has been a whole thing by itself. Sanctioning Russia and Belarus. They just put out a number of reports on the digital asset space. And that's actually a requirement from Joe Biden's executive order on crypto. Now, last Friday, the Treasury Department, along with the Justice Department, the Commerce Department, and the White House Office of Science and Technology Policy, all published reports. These reports take a look at various aspects of the crypto space, and they're reviewing CDBC designs. The Office of Science and Technology Policy brought out 18 designs for potential U.S. CDBCs. So Treasury has been busy, and now they're looking for some input from the public on how they're doing, how people feel about the department's approach to crypto and going after crypto-related crimes. And so today, they put out a request for comment. And the request has like 20 or 30 really open-ended questions. They're good questions. Things like, how can Treasury most effectively support the incorporation of AML CFT controls into a potential U.S. CDBC design? Now, my response, of course, would be, well, you don't. You scrap the idea of a CDBC and then adopt 2 or 3 stablecoins as official coins, and then let the market take care of it from there, which might be exactly what I tell them. Anyway, they're also asking the general public whether they have successfully, quote, comprehensively defined the illicit financing risks as they relate to crypto. Also of note, the plan is for representatives from multiple agencies to be involved in the creation of a, quote, coordinated action plan. Treasury, of course, the Attorney General, Homeland Security, the Director of National Intelligence, and the Secretary of State, they would all be involved to address the possible national security risks posed by digital assets. In the notice, they wrote, quote, the growing use of digital assets in financial activity heightens risks of crimes such as money laundering, terrorist and proliferation financing, fraud and theft schemes, and corruption. These illicit activities highlight the need for ongoing scrutiny of the use of digital assets, the extent to which technological innovation may impact such activities, and exploration of opportunities to mitigate these risks through regulation, supervision, public-private engagement, oversight, and law enforcement. So this notice is also tied to the executive order on cryptocurrency. One of the things that it asks about is how crypto might be used in illegal finance activities. What's the role of anti-money laundering or countering terrorism financing? One question asks if there is any existing, quote, regulatory obligations that are not or no longer fit for purpose as it relates to digital assets. Undersecretary for Terrorism and Financial Intelligence Brian Nelson said, quote, without appropriate controls and enforcement of existing laws, digital assets can pose a significant risk to national security by facilitating illicit finance, such as money laundering, cybercrime, and terrorist actions. Now, as far as the CBDC goes, it is not just up to Treasury. Justice is looking at the question of what legal instruments have to happen to allow the Federal Reserve to be able to issue a CBDC. Fortunately, it doesn't seem like they're too eager to jump into that one. A senior administration official told reporters, quote, "We're not going to get ahead of ourselves now while the Fed studies the issue." And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will have to stop talking. Take care of yourselves, but take care of each other too. We'll see you tomorrow night.